been an eventful week in terms of MSTR. I know all of us have been pretty loud on Twitter, and it's been uncertain and uncomforting. But I'm super hopeful and optimistic for the future. I think Bitcoin's got a lot of room to run. I think a lot of signals are saying this hasn't been, a multi-year top, and I'm super excited about kind of positioning into the fall. I'll give you my full macro and volatility overview and how I'm positioning moving forward. I call her the MSTR. I still have my 390 puts on. I sold or I bought to close my upside. Definitely seems like there could have been a floor in there today. Not exactly sure. Let's get into it. I love this stuff. Thanks for watching and always appreciate the support. Looking here, we can see the log chart of BTC or the Bitcoin Power Law, which essentially gives me at least a probability distribution of what's likely to occur, considering we're coming out of what I believe to be one of the worst bear markets historically, and for an extended bear market, that 22 kind of FTX collapse thing. We're sitting along the trend line. I think there's a higher probability we go up than we go down in the short term, 3 to 6 months. That being said, I really account for the probability that we do go down. I personally am a big believer in the power law trend, not the power law floor. I know a lot of people love the power law floor and say that's, the maximum bottom, and I'll use a couple references to illustrate that. But one which I really, really like is Log Pilot. He's on Twitter. He's the man. I'll mention him later, but he's got this power law trend, power law floor model. And the power law floor, I think, is much like the power law top. You can fit these power law trend lines to the top of the bubbles and the bottom of the floor, but they represent a small amount of the overall price data, whereas the largest amount of price data fits the trend line. And so I believe, and I'm kind of a bull, especially for reasons I'll mention later with the gold power law, that I think the price will likely stabilize along some sort of trend line, not along the floor necessarily. So when I'm making downside bets, which I haven't been yet, but I will be soon, the power law trend below the power law trend is always a value zone. It's a buy zone over a long period of time. Above the power law trend tends to be sort of a risky zone generally, and those bubbles can be larger than expected, and it's tough to know exactly when the bubbles will end. It's easy to lose your shirt, but power law trend I think is kind of your friend, so use that opportunistically. We could talk a little bit more about power law generally, Giovanni's work. That's how I got started in all of this, and even in MSTR was understanding power law. I think it's really, 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 really meaningful when you look at the relationship and correlation between number of addresses, hash rate, and price. That's really the essence of power law. Power law isn't just some trend line that fits the price. You can make any trend line fit a price. It's the fact that there's this group of trend lines and of correlation between important parts of the Bitcoin network, and it is a network after all. For networks to succeed, there have to be network effects that take hold, and for sound money to succeed, it needs to all be adopted slowly over time, kind of the same way people tend to move to cities. So I love power law for those reasons. Power law doesn't tell you what's going to happen tomorrow, even next month, or even the month after that. Helps you create a probability distribution and understanding of value. And that's something Howard Marks talks about a lot. When you're looking at traditional equities, you have to understand value and understand positioning, especially in the global credit cycles. With Bitcoin, we don't have that. We have liquidity cycles coupled with kind of a general trend of growth. And we can use Saylor's model as well for kind of a decreasing terminal CAGR. And that provides an accurate understanding of growth or terminal growth or value, right? We're just looking for value. So power law, Saylor's model, plus global liquidity cycles is how I view probability distributions moving forward. Now, this is the one wild card. I still believe it to be a huge wild card. It's the BTC price in gold. There's a power law there, but we're still sitting along the trend floor. This is some of the supporting reasoning for why I believe we'll settle along the midpoint or the power law trend as opposed to the power law floor price in fiat. Because I think over time, we will overtake the gold market cap and then continue to outpace gold over a very, very long time horizon. So I don't believe either gold's overheated, which I actually don't think gold is necessarily that much overheated. I think gold will continue to increase as monetary debasement continues. And for the same reasons, I think Bitcoin will continue to outpace gold. And whether that be, it overtakes gold market cap next year, the year after, or the year after, the year after, we'll see this continuation in a power law relative to gold if Bitcoin's being adopted as the hardest money known to man. And therefore, I believe that the power law trend will be kind of the terminal rate of growth, and that may, even slightly move up a little bit higher. But, gold's been on a tear recently. And so this is kind of my understanding of why this cycle could be quite big and bigger than my expectation, but I tamper my expectations in order to trade well. Now, Michael Howell's global liquidity, we talk about this a lot. I'll talk about it again. We're nearing the point in the cycle where commodities tend to outperform, much like we saw in 2021, where Bitcoin started really ripping and outperforming when interest rates were brought to zero, state or kept at zero, and then we neared this sort of liquidity euphoria moment. So we're getting up there, and the time for caution is soon, but the time to be long is still now, in my opinion. I love this guy, Pigeon. He talks a lot about NASH Equilibrium and how to play the Bitcoin cycles, the global liquidity cycles, with increasing risk but lowering capital. So that's completely accurate. When we're at 180, if we get there, 200k Bitcoin, I think one of the best ways to play this will be to have a lot of short dated, not a lot, but a very small percentage allocation in short dated out of the money calls to capture a crazy move up to 400k Bitcoin or something like that, while you have a majority of your capital stack protected and not exposed to the downside of BTC in order to play kind of this defensive move where you capture crazy upside, because the market starts acting irrationally as we move into this part of what is kind of the global cycle. Now, that if you had asked me a year ago, I would have said, you'd have 4% in MSTR calls or some sort of Bitcoin treasury call, but you need to be in the thing that's going to perform as beta, as ridiculous beta on the underlying. So MSTR obviously hasn't been that. Now, looking just at credit spreads, and this is the option adjusted spread over government bonds for the corporate index, and I have a couple more charts there. I'm just kind of looking at where we are in the credit cycle outside of necessarily global liquidity, and spreads are at all-time lows, so that tends to be a kind of a good indicator. Will monetary policy tighten after this bit of easing, and then spreads potentially tighten as things get a little rough, maybe after midterms? I think absolutely. So something to watch. If credit spreads are all-time lows, then there's only one way they tend to go, and that's up. We'll see how that plays out after interest rates. This is the high yield index option adjusted spread, credit spread here, all-time lows, similar to those before 2008. Interest rates are a bit higher, so it's a bit of a different landscape, but nevertheless, with interest rates coming down over the next year, I think we'll have a really good picture of where we are in terms of the credit cycle, and it seems to be nearing a top in the next year or two, but that doesn't mean there's going to be some crazy recession or anything. It just means, looking at the credit cycle, looking at liquidity, these are things to take into account. Same with the corporate index option adjusted spread, all-time lows. That's cool. Nothing much to say there. I actually prefer looking at the Bitcoin credit spreads. And if we take a look at MSTR, we know that the credit spreads have come up. The spreads are not tightening across the board. So Strike is trading below par, which is absolutely ridiculous in my opinion. We've got Stride at all-time lows, insane high yield bonds, Strife trading at a 9% effective yield or 474 basis point credit spread. So things are pretty nutty here. I mean, there's obviously not kind of a frothiness in terms of capital being allocated to these things. You look across the Bitcoin treasury landscape and they're all pretty much destroyed. So it'd be hard to say we're topping now as Bitcoin continues to climb. I think with difficulty of access to capital in terms of the Bitcoin market, it's tough to say that Bitcoin's extremely overheated with search trends low. The only thing that's been scaring me a bit is the ETH price and the kind of Ethereum search trends, and I'll continue to monitor that. But right now, I don't think Bitcoin's at massive risk because the credit markets are quite tight for Bitcoin. Now, I wanted to do a little bit of comparison for the different high yield bonds that exist and compare them to Strife and how that works kind of across the corporate bond landscape. I took the liberty of looking at JetBlue, which has this 10% 2031 bond. And if you look at JetBlue's capital structure, and I just did a very, very brief kind of ChatGPT overview, you can see kind of their balance sheet, and they roughly have 2 billion worth of net equity in their balance sheet with 16 or 17 billion worth of debt, 8.5 billion worth of total liabilities. So they're highly, highly, highly leveraged, and you can see their debt's trading similar to that of MSTRs, especially considering this isn't a perpetuity. This is term debt Um, it's quite interesting considering that Strife is 10x, or it's almost 15x over collateralized. Oh no, with the converts, it's only like 10x over collateralized by the Bitcoin stack. So that being said, I'll dig more into couple of these bonds for you to see what comparisons there are. But it's obviously different comparing a cash flow corporation to a Bitcoin kind of treasury company like MSTR. Nevertheless, Strife is this product that should be trading closer to the risk-free rate. I've said it once, and I'm going to kind of say it again. I mean, there's really no reason Stripe should be trading at a big spread if there's a premium in MSTR common, because the premium essentially indicates to the market that MSTR is completely able to pay the dividend, the preferred dividend on Strife. So this is something I think the market isn't really understanding. Like either the spread on Strife tightens or the MNAV of MSTR goes to one, in my opinion. Um, I guess these are two different markets, so there's kind of like an arbitrage I would think there, but it doesn't make any sense to me in terms of valuing these securities. Why those two things can exist together? We'll see how they end up. I could be totally wrong. Now I've shown the pref model, and no one likes to talk about this, but like the issuing corporation strategy has indicated that the issuing corporation has indicated that their main business model is issuing these preferred securities. So the loss of confidence in the preferreds over the past few days has been really, really terrible for the equity. Let's see, MSTR is trading up a bit. We're seeing strength in Bitcoin. That's great. Strife all took massive bloodbath beatings over the past few days. And the point I was trying to make here, the point I'm trying to make with the prefs is their success is the reason the common will trade at a premium. They are not going to lend out their Bitcoin. They are not going to get any form of yield on their Bitcoin. So the prefs are your hope, unless you think they will pivot business models and take on regular forms of corporate debt, which they've indicated they won't do. So anyone talking like this is a very simple business. It is the simplest of businesses. It's take on debt and buy Bitcoin. It's not rocket science, and you can model that forward with regards to MNAV and actual availability of credit in the preferred market. And that's what I've done. So once you do that, you figure out where the corporation's going, and you can model out the success of the prefs and how that will adjust kind of the leverage. So anyone not doing this, I think, is you can't just have blind faith. You got to have your models. I mean, when I was buying MSCR calls, I was looking at kind of my theoretical expectation of how much Bitcoin they could have per share using convertible notes and with a high leverage ratio, a 30% leverage ratio, and what that meant for kind of the MNAV as it expanded. I was like, oh, if Bitcoin's at a $200,000 valuation, then the fair MNAV, just based on the existing credit in the stack, is a 1.3, 1.4. So I felt that was kind of the floor. And now these Bitcoin treasury companies, they're not getting value based on their leverage in the same way they were. But I mean, you look at Semler, they're rolling with a loss in their operating business, so they're actually discounting the leverage that the business has. So that's kind of a problem. There's a lot of different factors to take into consideration. Now I wanted to look at price to earnings ratios. I mean, yeah, they're kind of high, but they've been trending up since 2008. I don't think this is super indicative of what I'm looking at necessarily. I looked at margin debt. I mean, just kind of a macroeconomic perspective, you can see margin debt seem to correlate a little bit with the S&P, but it's largely up and to the right. And especially with the introduction of kind of online brokerage accounts and the easy access to retail trading, obviously that's going to continue higher. I mean, I wish I could buy a call option on margin debt into the future. Now, volatility, we're looking at Bitcoin volatility. Bitcoin volatility remains subdued a bit, but exactly where it needs to be. It's the summer months. Bitcoin volatility is not out of the ordinary. It's again right where it needs to be. I expect it to tick up in the coming months in a very significant way, which I think will be great for the call options I'm holding on IBIT. And that would be my recommendation for a risk position moving forward. Now, MSTR volatility is at historic lows. I think it's quite frankly, a really big problem, and it may not be a solvable problem considering the market cap's grown so exponentially due to share issuance. I think what Saylor's done has been incredibly beneficial to the Bitcoin market and the Bitcoin market in general, as he's kind of siphoned away all of this Bitcoin such that it won't be sold onto the open market. But the volatility has been reduced, and you can see it's not quite that double of Bitcoin. It's difficult to take on to buy a call option. I mean, we've talked about the earnings call, we've talked about the change in guidance. Josh has talked about all of this. It's difficult to buy a call option. I wouldn't. The only call options I'm thinking about buying on MSTR for inclusion date with money I'm risking to lose. So I'll buy short dated calls based on the first inclusion date for S&P 500 with the intention of dumping them right after the pop. If he's indicated to the market he'll sell all upside, so I mean the upside's going to get sold to the benefit of common shareholders if you do in fact believe that. But I can create a more effective leverage structure in my own portfolio these days. So that's where I stand. The prefs offer unique arbitrages and value props, and I think they're completely mispriced. Me being bullish on the prefs is indirect. If the prefs, this is really important, something I think people like, they criticize me for being a bear or whatever. I'm bullish on the prefs, and to be bullish on the common, you must be bullish on the prefs. And if the prefs were constructed correctly, then any increase in value in the prefs should flow through to direct increase in value for the common shareholders. If the prefs were constructed incorrectly, then that won't be the case. So we'll see how that plays out. I think the prefs were constructed correctly for the pref holders. I don't know. I don't know if the prefs were constructed correctly for the MSTR shareholders. Time will tell. We'll see. Now, this is the VIX, the Volatility Index, CBOE Volatility Index. You can see we're sitting at kind of lows, not all-time lows, but still significant lows. I know Ryan does a lot of work on how to hedge with the VIX, but looking at across the broader market, I'm definitely looking at hedging my Bitcoin or my risk position, even though Bitcoin isn't risk, but trades with about 40% correlation to risk recently. I'm looking to hedge with sort of traditional mechanisms. I think VIX calls are one of the great ways to do that. S&P puts will be a fantastic way, and I think we're in a monster bull market for the next 4 years. But there will be obvious corrections, euphoria, cycles, liquidity cycles, you name it. We'll see what liquidity does over the next few months, but I'm extremely, extremely bullish for Bitcoin over the next 3 to 6 months. So that's just another update for everyone on Surveyor Capital and risk positioning and how I'm looking at the market. Hopefully it's helpful for other people trying to trade their own books and figure out how to make money in public equities related to Bitcoin. Thanks for watching. Talk to you guys soon.